Good day, friends. I'm Pavel. We're in Montenegro. To be precise, its capital, Podgorica. Today, we'll visit the forex broker AMarkets. Montenegro is a relatively young country. This country was founded in 2006. Its population is only 600,000. In comparison, the population of Chelyabinsk is twice as big. A few interesting facts. The official currency is euro, but it's used in the country without the approval of the central bank, European Central Bank. That's why all euros here are imported. There are no McDonald's restaurants or any other fast food places. The domain ending .me belongs to the government of Montenegro, and it already counts over 230 million websites. So let's go.
Nice to see you, Pavel.
Nice to see you too.
It's mutual. Come in.
Artyom, there are a few burning questions asked by the traders. Let's clarify them.
I'd be happy to help do this.
So, the first and most important question, is it true that all deals are transferred to the interbank, or is it a kitchen after all?
The AMarkets company has a few inside scenarios, or let's call them directions, that are used to hedge the client's position. This can be covering a single instrument. For instance, if we took a currency pair in this case, I would not call it a single instrument. A separate asset with this currency pair can be a single instrument. The first type of a cover, I can quickly offer an example. The client opens the trade for buying euro with a dollar. Another client opens the trade for selling euro for Japanese yen. It's a no-brainer that both sides are based on 100,000 units of base currency, euro. What should we do in the case where there are large sums of money in trades, and we understand that our system of counter-trade orders with the same parameters has no such sum to cover these trades? We need to open these trades as well. But why would we open the first and the second trade? Pay the spread in the first case and the second case. If eventually the trade becomes swapped for a few days, we can act smarter. Euro USD and Euro JPY can be circled with one currency pair, USD JPY. It's enough to use our counterpart in the interbank to open the transaction with a small rate in this case. If it was one lot for Euro USD and one lot for Euro JPY, it could be possible to open a 1.1 to 1.15 lot for USD JPY. It means we will save money on spreads for future swaps, probably on the rates as well. Of course, we don't take any responsibility or risk, i.e., we try to minimize the risk to zero. And the second method is the most widespread, including the company AMarkets. Where it happens, this is the analysis of the net position. And when we check the common lopsided trades, we decide about covers taking into account the net position. The example is Euro USD, the sale of 600 lots, the purchase of 400 lots. In a normal situation, the pair Euro USD is simply the most liquid currency pair. It is also the most popular pair. Once again, let's return to the cover. We need to open 600 lots in the interbank, buying and then selling 400 lots. Why do this if there is a net position that counts over 200 lots?
200.
Yes, to reduce these risks. Instead of this, together with clients, we can buy 600 lots and sell 400 lots. And we just open other 200 lots for sale. It means literally, instead of 1,000 lots to minimize the risk, we will need only 200 lots. This number is 5 times less. Depending on the appointed covers, we say that this is the inside information, the risk department. With your permission, I won't disclose this information because something must stay a secret. There is a certain cover, a certain divergence, a certain market situation coming from the platforms. Depending on these conditions, we decide on the hedging mechanisms and triggers that may be used in particular situations. And that's how we start hedging. I'll repeat, we are minimizing the risk. In such a way, we are taking care of tomorrow. Under no circumstances do we allow the market situation to affect the stability of our company. We make sure that such things don't impact our reputation. In general, we make sure every trader involved is calm. Minimizing hedging risk allows for improving the obvious trading conditions. This is also a very important moment, and it can be an even more important moment when it is followed up with loyalty. The growth of loyalty from clients, as my colleague has once said, changes the status of such clients to be fans of a certain broker. Such loyal clients make the brand like AMarkets. That's why the risks are controlled. Once again, I repeat, that if a company is present in the market for a long time, it means that this company has at least a normally functioning hedging department. A risk department is a normally working broker with absolute control over everything. This means that the broker doesn't take risks. I can't say about the new emerging companies. I think that you need to stay away from them.
I agree.
We are in our second decade. If we had any precedents related to the problems of withdrawals of money, there would be negative word of mouth that would cause us to cease to exist as a broker in a few years. We don't have such precedents. My sincere thanks to the guys who are working in the risk department and can evaluate the situation and understand what happens.
Okay, Artyom, thanks for your honesty. Let's move on. How can a regular trader be sure that the broker won't scam him? So I deposited money, pushed the button, the price increased, I've earned money. I push the button again, and the price has increased again. How can I be sure that all the money will be withdrawn without any scamming? That it's not a kitchen?
It's a normal question. Normal, no matter how you look at it. Everyone is concerned about this. But I don't think this is a question you should ask a broker who has been working in the market for a long time. Because if there were any suspicions, we wouldn't have such a client base. We would not have been working for so many years. We wouldn't have the reputation like we do. You will get your money, no matter how frequent these questions are. Almost always, such questions are asked with a particular thought in mind. Where will you get such a large sum? Where will you get the million I have made? But you understand that you've made this money and you will get it. If you make $1 million, trust me. Before you do this, you would work in the equal liquidity platforms in the interbank. You will earn such profits only because other traders will lose those profits. For example, you will buy Euro USD, and they will sell it. Yes, the Forex market is a closed system, with many channels of money sources. But these funds circulate from sellers to buyers, from buyers to sellers, from less fortunate to more successful traders. These $1 million will become yours only because you will be ahead of other markets participants, traders who will lose these $1 million. And this will be more proof of the fact that money circulates in the normal financial system.
If I make 1 million, will you withdraw such an amount?
We'll withdraw if you make 10 million or even 100.
Okay, we will work for it. There is another popular question related to the recent events in Russia. If the internet is blocked in Russia, they turn it into a chebernet. How can you withdraw money?
Well, I think everyone worried about this question knows about, or at least should be aware of, VPN. This is the so-called private and closed channel for online connections that allow getting access to the website that was blocked in the territory of a certain regional jurisdiction subject. Or, for example, access to the resources of a company that simply doesn't provide the services in the territory of this market. Launch VPN, go to the website, and do exactly everything that interests you, what you were used to doing when there were no problems with regular access.
But what if the internet is blocked, including VPN, And that's all. We're like North Korea.
Well, I can't even imagine such a scenario.
I honestly hope this won't happen. We will continue to use the blessings of civilization. Do you allow trading the news?
Sure. Choose market execution and go ahead. Only you will quickly realize that this isn't a completely profitable strategy. The market is very fast, and without receiving requotes, a trader faces another negative subtext, slippage. I think people who trade the news need to understand the essence of the first and second line during the execution, and should initially know the risks that may literally burn the funds.
Look, we have an article on our website. It describes why trading the news is not worth it, and its main point is that liquidity providers are simply reducing their risks. Leave the market at this moment, and there are fewer left. Eventually, only matching remains inside the broker and a few liquidity providers. Because of this, there are big gaps between prices, spreads, slippage, etc. In general, is this the correct information?
Yes, completely. But this is how it affects the processing of client orders when they're closed, not by the prices in the active volatile market, compared to the prices forecasted by people who make these deals. But once again, this is a foundation and the theoretical base of the financial market. It's normal. Let's say it's the activity of liquidity providers. You may get these prices under the conditions of the active, narrow, or wide market. This is a normal thing that you just have to accept.
I agree. Yes, many people do not agree with us about this article, that we excuse and defend other brokers. In reality, everything should work at all hours. No matter what someone says about the non-farms, on the dot they are working with the chosen price. Unfortunately, the reality is different.
The reality that many traders tend to bend to accuse the broker.
Yeah, for sure.
But I think that the times when all brokers were taken for scammers are long gone. We are working in the same common system now. Right now, there are no such things like schemes or pitfalls when it comes to brokers. I'm puzzled with questions about the use of tricks. Nonsense. How can we do any tricks if you can instantly compare the price to the prices posted by a dozen other popular brokers after the incident, and you can see that the prices are different?
Yes, if other brokers had different rates.
How could we explain ourselves in this case? We couldn't. The FineCom that regulates us would definitely punish us for such activities. If in any case, even if accidents like this happen, we always take the client's side. Because we understand that it could have been something out of the ordinary, a force majeure which sometimes occurs on the market. But such a scenario isn't normal, and that's why clients can't suffer from the consequences.
In the last years, most brokers don't have any precedents, or maybe very rarely, and accidental.
Like non-market rates, accidents that even they don't expect.
They literally clean the mess up instantly. Why don't you have cent accounts?
We had SIN accounts. We had them at a time when we found our niche. We became a broker with the highest percentage of successful traders, and paying attention to the fact that as soon as we started to offer the cent accounts actively, the statistics became worse. Eventually, we came to the only right conclusion, that cent accounts demand the constant work of an advisor in common. When working with advisors, it implies that before the grail appears, you need to test a huge number of parameters on the same real charts, debug them, configure them, and so on. Before the grail for the advisor appears, a trader has to go the path of incorrect trading decisions that affect the results. This path ruined our statistics. We started with very good indicators of the high percentage of successful traders. After the observation that we were going down, we removed the cent accounts. Now we are fine. If you don't know, our percentage of successful traders is what we are proud of. It's on our main page of the website, something that we constantly monitor, compare on a quarterly basis, and, by the way, compare not just to other brokers from the regional markets. We compare to the best brokers. Like chess players say, if you want to become smarter, play with smarter opponents. We compare to interactive brokers, Owanda, Ameritrade. Judging by these results of the first quarter, when it comes to the percentage of successful traders, we are in second place, over 40%. What causes shock among many people because we got used to the trading concept and common rule that the percentage of successful traders in the Forex market is no more than 2%. But some companies create the instruments helping people to make reliable, profitable, and justified trading decisions.
In general, are all cent account owners the drainers?
I think they are.
That is how it works, folks. What else to do? You have many clients, and respectively, we prepared the related question from our guys. Can a broker monitor the time frame that I use for trading, what indicators I use, or what kind of strategy?
No, it's not possible. It's only possible if EAs or certain scripts are working together because they may send the system notifications. They are shown in the special line of the manager, and they come with the text and comments about their work. For example, if a trader works with Advisor Lon, it has a simple base and level that opens in a certain time frame. No other information is displayed. Indicators can't be seen unless someone hacked your account and password to use the balance of a client. Otherwise, the broker doesn't see this.
Do EAs show something else other than a magic number and comments?
No.
Maybe any title of the expert in the chart?
No.
Let's say if the comment of EA has the text Grail, and I bought this EA from Vasya for 100,000 rubles. Can't I hide the nature of this EA?
Yes. I would say that there were cases when people knew the broker can see the title. They wrote obscene words, so to speak. That was hilarious.
Yes. Good. Can a broker change the price at its discretion or cancel a trade?
We have partially covered this theme, about the change of the trade's price. Sure, we can't. The non-market rate is possible. But this can only happen due to a force majeure from the liquidity provider. It's hard to explain the tricks. Usually, they are called force majeure, and all affected clients receive the compensation. It's a fact. The times when brokers use these cases for their own benefits have long gone.
As for the large client base, have you noticed any interesting peculiarities of traders' behavior on a large scale? An American broker, I don't remember which one exactly, had an interesting study which has shown that trades at a loss on average are held twice longer than the profitable ones. Have you noticed any interesting features?
Roughly speaking, I can say that unprofitable trades live longer than the profitable deals. It's not our unique observation. This is how psychology works. In most cases, a trader does not close unprofitable transactions if it's not some kind of systematic approach. There is always a calculation and hope that it will not just turn into zero, and eventually it will be profitable. This is a widespread rule that is common to all traders. The only thing that comes from these observations, we partially converted into a separate product that we don't offer even for personal use. We offer our customers an indicator of personal moods. There are several types of it. Cayman indicator is a separate type that simply analyzes the common position of the market's participants towards the upcoming change of prices. This indicator can assess the bearish or bullish sentiment, and then we came to the conclusion those who practice this way of approaching the market, monitor the assets, they won't agree that each time when the situation occurs in the market, for example, 60 to 70% of traders buy. It's important to keep the head count because an individual trader is only one solution. You don't need to look at the volume either if 60 to 70% of the orders are the transaction opened in one direction. As a rule, they are absolutely sure the market will either keep growing or fall. This, when the turn happens and the market becomes very volatile, goes in the opposite direction. In this exact moment, you need to think about how to protect untraded profits and also think about opening a position in the opposite direction. That Cayman is not about our PR. I can really say that it works very well for the pair of Euro USD. It has critical levels. This is exactly 30 and 70. If the percentage of orders opened in one direction reaches these levels, it's a powerful signal that a potential reversal is going to happen. There are zones we marked, and they are 70 to 100 and 0 to 30. If Cayman reaches these zones, these powerful signals cannot be ignored. You won't forgive yourself if you know this information and won't trade any transaction. I advise taking a closer look at the available functions and use the Cayman indicator in all these cases.
When it comes to this subject, our guys research that 80% is a better indicator than 70%. It happens less frequently, but it's more likely that a reversal will happen when there is 80%.
Yes, I agree. There is a high chance of probability, and it's growing. When it comes to critical levels from 0 to 100, you must understand that it never happens.
I don't know. Once in a decade this happens. What about the crypto? Will spreads be lower? This is a factor that prevents many people from trading. Are there any traders who trade the same as with euros, US dollars pair? Or do they just buy and wait until it goes to the moon?
To tell the truth, there are no such traders. Even working with an exchange, with a broker, every trader waits for multiple X, taking into account that something will arise. The interest in crypto grows each time when Bitcoin overcomes its personal price records, like right now. It's a very interesting theme. I think you can post the time code that we are talking about Bitcoin. The last time I checked, when tested 11,000, and I noticed one thing. Yes, Bitcoin keeps growing. It still creates a lot of hype. In my opinion, I'm sure that Bitcoin has many advantages that help it grow in the future. Recently, I've prepared a huge article for Forbes, by the way, about the future of Bitcoin, the reasons behind its hype. Everyone thinks that it is a very popular theme, foremost. It's related to the launch of Libra by Facebook. I won't say that this is the defining theme, though I admit that if the U.S. Financial Commissions allows Facebook to launch a crypto competitor to USD, the interest due to the number of people online and their interest in crypto a priori will grow exponentially. And some of this will go to Bitcoin through some kind of transactions. The interest will keep growing. I would even relate the fact that the cryptocurrency is involved in the trade war between US and China because of the custom rates increase. The temptation to do everything possible to transfer these funds and work with those assets characterized through a decentralized anonymous nature. That's why the anonymity of this asset as the founder of the industry now contributes to its growth. Another point is the benefits of Bitcoin. This is its non-inflationary nature. If we compare it with traditional currency assets, which, as I call it, are doomed to inflation oblivion, Bitcoin has many advantages. Why did the situation in Venezuela go that far? The International Monetary Fund forecasts 10 million inflation. This means that now, if you want to buy a TV in Venezuela, you'd literally need to carry a wagon with money and take it to the local supermarket that sells TVs. Thanks to the current situation of Venezuela, we now see that money is losing the only thing that it should have. Its value.
Its value.
Yes. Also, I have researched this subject. I noticed that every time there are regional Venezuelan sites, every time a new peak for inflation happens, the demand for Bitcoin grows at this particular moment. It means that people are less likely to believe that something can be resolved in the situation of obvious hyperinflation. And, of course, investors exchange to stablecoins. Many investors believe right now that it's Bitcoin. I believe BTC is the upcoming hedging instrument. This digital currency is at the very beginning of its journey. This instrument is already showing signs that it will be promoted as an asset for holding on to.
It's a new gold. We have already analyzed earlier that during a financial crisis, the price of gold goes up. And sure, right now, gold keeps growing. But so does Bitcoin.
The percentage of gold equivalent increased by 12%. For Bitcoin, by 200%. What else is to compare here?
Good. The next question is about MT4 and MT5. Will MT4 keep its popularity, or will only MT5 remain? Is the change of generations coming?
Yes, the change of generations is coming. When I was learning the financial markets, I used to work only with MT4. Now I understand that it's high time to replace it with MT5. Maybe this change will be painful for some people. Only old-school traders who got used to MT4 are against changes. But generations are changing. MT5 offers more opportunities. MT4 slowly retreats into the shadows because their minimum upgrades don't bring any innovations that are offered by MT5 at the same time. When it comes to administration, not from the client's perspective, but from the broker's point of view, the broker who works with the software thinks that everything is very bad. And this particular point also makes the work in a certain format much harder. And I think that a little time is required for MT5 to become the #1 trading platform. And in a while, no one will even remember MT4.
We'll see. The most important thing is to keep MT4 working. Otherwise, the change will be harsh.
There will be no harsh change. It's already been happening for a few years. I think if they had opportunities to perform a harsh change, they would have already done it. They would stop upgrading.
They could just shut it down.
Yes, even MetaQuotes understands that MT4 is used by the vast majority of traders. That's why it happens. But the numbers of MT5 users keeps growing annually. This is a fact I can prove because I see the statistics. And the change of MT generations is coming, just like with everything else.
You are working in many countries. Do you have interesting observations related to certain countries where the traders are more emotional, where the most active or passive traders are, where the most profitable traders are? I'm not asking about the percentage of personal profits. I'm more interested in the percentage of profitable accounts. For example, do the traders from Saudi Arabia understand the oil market better than the others?
I understand the question. When it comes to profitability, I wouldn't be specific about any regional subject because, in the end, everything is all about human nature. People are pretty much the same all over the world, relatively speaking. But when it comes to the fact where more or less active traders are,
temper like, I'll show them all, this sort of thing.
Yes, there is Asia that stands out when it comes to active traders. They are active with small deposits. They use expert advisors a lot. I explain it with the mentality of a certain region, pragmatism of these traders. Because Asia proved many times that it is not a region with their traders, that they are conservative. Do not work with large sums of money. They are ready to work with small sums. They prefer sink or swim situations, to win or lose everything. The small risk, the deposit of $1,000, $10,000, but this is a massive load of deposits. The constant activity in the account and a forecast that $10,000 can be turned into $100,000 in a week. However, there aren't many success stories when it comes to such aggressive trading.
Obviously.
And if you take, for example, the CIS countries, there are more conservative traders in such states, the large deposits. I even sometimes wonder how competent the training can be. There are very low risks. The turnover is also insignificant. So I admit there is still such a thing as some kind of regional mentality. It still affects the decision.
I thought that Asian traders are more into philosophy. They are calmer because of practicing Zen and all. Turns out they're not.
In Malaysia or Indonesia, they aren't like you've described. Perhaps trading is more aggressive in China.
Interesting. And the last question. Is mobile trading our future? What percentage of traders are trading using mobile apps? How many traders are using MT4 or MT5 on phones?
I think so. I know for sure about 50% of our clients are using mobile apps. Substantial growth happened in the last couple of years. Personally, I almost don't use the desktop version right now. I've noticed if I work with a trading platform, I do it only on a mobile phone. It's as efficient as possible, as convenient as possible. And the best thing is that you're not distracted by anything. You instantly appear in the market without any stupid piles of charts or any temptation to build on the charts.
Well, I'm probably old school. I've worked in this market a long time. That's why I love these huge charts with indicators, all these trifles. I love to set them up and tune in. Unfortunately, or fortunately, who knows, there are fewer people like me nowadays.
I would say that it's possible. If this is some kind of system, it's built on a certain set of indicator parameters, a certain approach. But in the end, if a person decides to open positions using the desktop version, after a while he turns to the so-called mode of monitoring, just to check what's happening. This mode implies constant access on a mobile phone because even my colleagues don't give up on this idea. And in our circle of people who work in the financial markets, this really is an application that is most often used. I think that for many traders, MetaTrader is the major app that drains their batteries in time. The constant monitoring and control, especially if we talk about a lot of money.
I agree. Great. Thanks for providing this very useful information. I think many of our viewers find it interesting as well. I do for sure.
Thank you for the questions. They were interesting. I hope I helped to clarify them.